What's up, everybody? Welcome back to the channel. I hope you all had a great weekend and you're ready for another busy week in the market. There's a lot of red folder events this week. It's also Opex. And so the list is also not as large this week. I think it's somewhere around like 10 or so names, but I also wanted to do something differently this time where the first portion, I do want to give some kind of market outlook. And if you do enjoy a market outlook before we go into the watch list for the week ahead, let me know in the comments if this is something that you want to see repeatedly or a little bit more of, or I can separate them into videos, what whatever you guys want. Also, if you'd like to receive my watch list a day in advance so you can use it as a form of homework to prep and create your own analysis before my videos get released, make sure you follow me on X at AB Trades. I usually try to post the weekly watch list a day or so in advance to give you enough time to prepare before I get into my video. So remember, none of this is financial advice. This is just me sharing how I'm approaching the market, things that I'm looking at, and hopefully give you a few ideas to add to your own watch list. So without further ado, let's go ahead and get started with our market outlook. So with my market outlook, I like to utilize ES, right? Our E mini futures. And when I come on here, I like to kind of break it down from like a weekly to daily perspective just to understand what's going on. And I like to annotate a few things. So when I start down, it's a top-down analysis. So when I have the weekly, we're still inside on the week. And what's funny is the week of November 3rd, we did actually start to kind of displace down. And it kind of mimics what happened back in October 6th, right? You had an aggressive displacement, the next week came inside, and then you started to push up higher. Well, those two things have a lot of similarities, right? We did push down and then we also held inside on the week. The only thing is this time it's not as convincing as what happened in early October into October 13th following the Opex, right? So based off of this, nothing has still really happened on the higher time frames. We're still Order flow is still kind of pointing up. Weekly held inside. There is similarities to what happened on October 6th, October 13th. So then I'll dig down into the daily. We can see that we did actually hold our previous week low. Now, something I want to point to your attention is the SMT between NQ and ET. Sorry, I don't know what the hell I'm saying. So you see how NQ actually swept previous week low and pretty much reclaimed back into the range. And when I head back over to ES, you can see that discrepancy here. And a lot of the times that is your smart money trading concept, your bullish divergence, because one swept while the other one did not, allowing ES to maintain the integrity on the weekly. The only downside is how did we get here? And so we have to pay attention to the imbalance that was created on this aggressive move down that did allow us to establish that um, small little bullish divergence there on the higher time frame. So I will come in here and annotate this. Where is it? There we go. So we do have this aggressive daily inefficiency that is preventing price. So when we look at this from a weekly standpoint, I would say it's still more on the neutral side as we did hold inside week and there is similarities dating back to October 6th. Aggressive move down, inside week, then followed by continuation. So is this going to show some kind of similarities? So now I go into where I really do get my information here, and this is on the 4 hour. So we have our weekly 50%, that's pretty much holding price still, and we also have our 4 hour, which is showing some potential signs. Now, let's look at this. So, the last time we had a really nice weekly sweep followed by our 4 hour displacement that then gave continuation. So now we have something similar here because if this 4 hour would have failed, we would have continued this kind of trend, right? If you would have pushed up and we would have broken underneath this refined demand, OB, inefficiency, right? Price would have continued to deliver down. So I have to take into account the fact that we kind of have similar action again. So we have our last candle down before an aggressive move up, which we did take into account that 50% of the body. So 6732 is an important level. And we also have this small little inefficiency here paired with our previous month 50%. So the last 50% threshold of our monthly candle. So I'll come in here and I'll also do this, wherever it is. Right, so we have this supportive inefficiency here paired with our previous day low. And so if ES can stay above 6732, I do think we could potentially start to attack that 6819 and see how we develop into this daily imbalance, right? See if we want to redeliver into that and then address what's going to happen on the higher time frame narratives. So there is a small window. So when I take this down from my time frames, I would say the weekly is still neutral, and then I would give preference to the daily and the 4 hour. 4 hour and daily, the daily because of the bullish divergence between NQ, and then the 4 hour because we do actually have some signs of buying. Remember, I like to be in the direction of where displacement or aggression is establishing. And so in this scenario here, because we did fail at previous week low while NQ swept, and then we had an aggressive reaction from 6,700 up into like 60, almost 100 point move worth of displacement, which when we go back to this October 6th or whatever it was like 67 to about, this was about like a 70 point candle, kind of similar to this one. So it really comes down to, can we now stay above that 6732 and kind of deliver around here? Because again, now you see where we push up into the previous week 50% and that daily inefficiency and how we kind of start to reject. So we could have some kind of internal battle, and my overall bias will be determine whether or not we get a 4 hour close above 6782 that starts to deliver us a little bit higher into that daily inefficiency, or if this supportive imbalance on the 4 can prevent price from going further down. And if it does, 6732 is my pivot to kind of adjust and see if we do lose that, some kind of retest that then takes us down into those previous week lows around that 666 area. Okay. So that's kind of my market analysis and kind of my bias for this week. It's a little bit in the middle, but there are some potential signs of life for buyers, is how I would approach this. Okay, starting with my weekly watch list. First up on the list is Dash. And the reason I like this is because we had a really nice, in strat terms, little PMG trigger here. A lot of buy side was taken after a aggressive previous week low. Look at how we take that week. So in terms is like you have the turtle analogy. You poke your head out and then immediately back in. So with this aggressive move paired with previous day 50%, now I have a reference point. I have a really nice supportive gap to see if Dash can start to set up those reversal structures. Because when I go on the daily, look at where it's at on the daily, right? Same with the weekly. So the weekly has now started to try and hold in this general area for about 2 weeks now, right? Price came down into the low 190s, held. Same thing, price took previous week low and kind of held again. And we do have this here. Need to extend this out so you understand the narrative of, why price is kind of holding a little bit. Right, so we have a very nice weekly PD array here on the higher time frames. And when I go back into the 4 hour, now it really just comes down to this reference point. The same way we talked about ES. So a lot of things that I'm talking about are pretty much going to be very reluctant as to how the market holds those confliction zones on the upside and downside, right? So with Dash, we have this really nice reference point to where we can utilize this really nice PMG off of a really nice failed breakdown with an aggressive recovery. So this is the delivery I want to see when I take broadening lows or broadening highs or some form of reversal structure. Because now if we come and retest those previous day highs and stay above like 196, then we can start to attempt back into this gap, right? Like the 216s, 220s, 230s, somewhere within that. Now, if we lose this gap, I think 196, then I think we can get a little bit more continuation down into the lower 180s. So a lot of these are going to be kind of if then scenarios, but with a little bit more, um, I guess, bias towards that upside because of how some of these are developing on those lower time frames that can domino into the bigger ones. Next up on the list is CEG, and I believe I'm on this is the correct chart here. So we have Constellation Energy Corporation, ticker CEG. Now we did get a previous day high sweep and guess like failed attempt to continue. Now what I am going to be watching is if we are going to be working on a form of redelivery into discount of the overall trend from swing low to swing high, we have a really nice pocket of potential discount in between the 306 and like the 325. So I'm going to be watching to see if we don't get any immediate continuation off of this. If 355 doesn't fully accept this week, then I will be looking for some kind of external dip buy in here to kind of assess a nice driver into discount off of a really nice liquidity sweep into a really strong inefficiency paired with a gap to see if we can get some kind of redelivery back into maybe 385, 402. So it could be more of a short term downside move for a higher time frame degree upside expansion to kind of keep intact the narrative of this overall trend, right? Because from higher low, higher high, you're still within that higher low area to eventually get you some further expansion. Next up on the list is MP, and this one is also going to be utilizing the 4-hour structure. Right, so we do have a small window here. Sorry, it's just a little bit of a noise. We do have a small window here. Just again, we took out a really nice external low, and when I'm looking at these external lows, right, whether upside or downside, is how does price aggressively move, right? The delivery from those contextual lows or highs. And so if I get an aggressive move back into some kind of range where, again, this is displacement into those lows, look at what happens. You go outside 4 off the broadening with back-to-back displacement and a gap. So if there's going to be any signs of buyers on this initial attempt, it's not on the breakout. It's confirming that higher low that expands into a higher high. And if this higher low is going to hold, we do have some nice liquidity to target, right? We have this really nice gap here, which would be a really good target to see if it holds. Now, this would invalidate if we lose 52.60 and then continue the short, because from a higher degree, this could still be your lower high into the lower low. So we're playing with a bit of fire here because of where we are in terms of like all of the higher time frame stuff. It still kind of points down, but if there's going to be any window to kind of change it, and if we want to start looking for the buy side of the curve, it will be in between this zone, because this is where you show signs of buyers within the auction. And if this auction is going to hold true to this overall development, you want to try and confirm it and establish a nice little breakout into the 67. Now, if you lose that like 52.60, so make sure we annotate this in red to kind of allow us to remember. Right, if we lose this 52.70, 52.60, then I would just continue the short. But you do have some really nice compression here into discount of the potential buy side of the curve. Next up on the list is CAT, and I am taking into account, again, a lot of this stuff looks similar. I'm not a fan of how we displaced, but I do like that we took out our previous week and day low and kind of came back into the range. Similar to what happened here. And here you got some pretty good redelivery back. So my analysis here is we have this post-earnings gap, our power gap created by a really strong catalyst. So we do know that from historical data, that these aggressive gap ups can tend to find buyers, as you found it here, and potentially starting to find some here. So if we lose 52, like 528, 530-ish, then this can actually end up becoming a really crazy short because of this LRLR that exists underneath it. But while we continue to hold, I think the risk to reward favors buyers as you are here. Now, if you get some kind of aggressive 4 hour, then this becomes a really nice short back down in like 490, 480 area, maybe even like 507. So just watch the development of CAT as we are in this gap because it's your previous all-time high breaker. And when we take into account that swing low to swing high on our 4 hour, this could still be part of that internal leg before the next expansion. So pretty simple on this one. You're also at a range low, just has to see how price delivers out because you could also push up, reject, and then break down and start your new trend. Because a lot of the times, remember, when we are at all-time highs, right, and you get failure expansions or you get those exhaustion candles that start to come in and you start to slow down, that is where your sell side of the curve could begin. So you could also get something like this, right? So definitely keep an eye on CAT and its development within this gap. Next up on the list is Carvana. And I believe I'm on the wrong chart here. Carvana does have some potential for that buy side of the curve. Again, this is all if then. It really just depends on how we do within those zones that we provided on ES. You do have a bit of an inverse head and shoulder here, and I tell a lot of the times when I do my educational classes, when you're looking for those potential structural changes, one of the first indications is actually a pattern, your inverse head and shoulders, because when this starts to happen, right, if you look at it like this, it tends to actually identify those trend changes. And when they happen at the bottom of the broadenings, so like some kind of external sweep, as you see here on Carvana, we got a really nice weekly sweep. Same thing for the daily, and it looks a little bit clean here. You do have this aggressive move down countered by a really strong move back up. So some displacement paired with a gap, and you have confluence of that gap because it's also your previous week 50%, the golden pocket of the potential higher low. Again, remember, this has still really not confirmed any kind of trend change, but if it is, again, this is if it is, you have confluence here. You have the gap, you have a really strong 618, previous week 50%. It's also a potential inversion because this is where you displace and then you counter it with displacement back up into the range. So a lot of stuff to like in between Carvana. And I would say if the like 297 fails, then this invalidates and you don't get any continuation back up into that next higher high, which would be somewhere around the 350 mark. So a lot of these charts have those similarities, right? You're starting to see that. And for Microsoft, this one's based off the hourly. So once again, something very similar to a lot of the other charts. It's going to be a very close week. We're gonna learn a lot this week, I think, in terms of determining what the market really wants to do for maybe the rest of November. So Microsoft actually showed a lot of really good characteristics when it comes down to price delivery. This is your 4 hour leg. Price comes back. You actually almost swept those highs. So this would have actually confirmed a really nice structural change on the lower time frames that can then domino into the higher ones. You were just shy of that 512 area. But I really like the overall development because this is a really nice internal sweep into a really nice gap here. And now you're balancing above it. So this could also be some kind of range. So for me, it's as long as Microsoft stays above 496, because if 496 fails, then you obviously continue down lower into those um, daily buy sides, and you have kind of clean relative equal lows around the 493. So all eyes on that 496, and if that fails, you probably get a more of an external range sweep before a true reversal starts to occur. So going back to the hourly, if we can continue to defend that 496, I do think we can actually get some nice structural changes into 525, 530, and maybe 535. So one to keep on watch. Still early in its development, but it has good signs of that to start to benefit us. Next up is ASTS. This one is going to be a very straightforward chart. I've talked about this many times, and I do think we are getting into that window for a very nice long swing, right? We take into account this full weekly expansion. We have some really nice price build up into our discount. And I do think it can eventually benefit a really nice expansion into like high 80s. So keep this one on watch. Again, I think, oh, did I delete the discount? Yeah, anything in between that like 50 and 65 is on potential watch. What you want to watch for from here, though, is some kind of 4-hour delivery against the lows. So if this is going to be the low, you would want to see some aggressive push and then a nice structural change in terms of what you've been seeing, right? Lower high, lower low, lower high, lower low. You now want to change the trend a little bit. So when you find the applicable point of interest, which 52.61, you can start buying and then you add on the structural change. Next up on the list is NVT, and it's also very similar to a lot of the other charts. Aggressive breakdown, you did fail at this 4-hour CB, or sell side imbalance, that did push us down into previous week and day low. But you do have a bit of a nice daily here. Not the greatest, you did wick off of it. So now you just need to push through that 110 to kind of counter this failed attempt on that 4-hour CB. So again, if you can reclaim that 110, I do like extensions into 120 potential. And you're also at that like higher low mark as well. So I just have to see how price delivers. And if you lose, I would say 97, I think this becomes a nicer short into that lower gap in the low 80s. Next up on the list, and I can't believe I'm talking about this, is CVX. And the only reason I'm bringing this to your attention is because of what the higher time frame could be showing us here. And I'll cover this briefly, but this could be setting the tone for later in the year. You could probably already see where I'm going with this. Where's my manipulation? There it is. And then we have the expansion. So CVX has been stuck in this kind of consolidation range since 2023. You got this very aggressive weekly displacement down that did take out nearly all of those external lows, even the one dating back to 2022, right? And now you got this really nice reclaim. In a standard approach when it comes to, just technical analysis, if you break the range lows, you're technically supposed to reject and continue lower, right? So when we're looking at these PO3s, or power of threes, right? When we're looking at them, when you get that reclaim, it's something to pay attention to. And then how does price deliver after that? So I think it could be in some kind of compression state to where then you eventually start to break out into the higher 170s. So this is definitely something to keep on watch. You can also take it into account like the weekly leg. So you can see we still have not reached our equilibrium of price. But if there is some kind of heavy rejection for whatever reason on CVX, I'm watching for a weekly push that continues, or this compression just breaks out already, because you have some really nice LR here that's starting to set up. Oh, why is this white or red? You have some really nice LR based off of this weekly reclaim. So you have your accumulation manipulation. Now do you get the distribution back up? And when you start to zoom in onto the lower time frames, I mean, look, I understand oil is oil and it will piss a lot of people off. But even if you break down, look at the context between that golden pocket, right? You have a really nice daily OB. Like there's so much supportive PD arrays within the golden pocket if you do break down. And if you don't break down, you have this gap to target and the expansion highs of the manipulation or the consolidation range. So whether you break down or not, I do think CVX can definitely start to trade up into those 170s areas and kind of complete this monthly. I mean, look at the monthly, guys. You're still inside on the month, back-to-back months kind of holding within. You even got the previous month sweep and now back into the range. So is oil setting up for a bigger breakout? This is a really nice higher time frame PO3. Definitely one to not sleep on. Maybe just buy some like February's or something and see how they do. Trade out all the way into the next earnings. But the chart is there and it's setting up. Just comes down to the entry in my opinion, because this can be a little bit manipulative. Next up is CMG, and we did trade this in 8x trades for a nice little 50-60% reversal, but I still want to keep an eye on it and track it because of what it's setting up down here. we have again a nice reference point off of the broadening lows, and we actually reclaimed the last swing low point. So swing low, swing high, and now look, when I drag this out, our swing low actually got a nice reclaim. So I think this has the potential to start setting up some really good reversals to then maybe start to trade it back up into the high 33s, low 34s. So definitely keep it on watch in terms of its development above 30, really. Can price now compress, consolidate here, and kind of change this little hourly structure here. So when I zoom into the hourly, I'll show you what I mean. A little bit cleaner on the 2 hour. Right, you get the breakdown, slight push up again, and now you actually reclaimed it. So you had this little inefficiency here that you're now trading through. So again, in my opinion, if CMG can manage to hold above that 31, also the previous month low got reclaimed. So if you kind of just consolidate here, I think it sets up for another leg higher eventually. So pretty good looking chart. We did already kind of get a good chunk of this swing, 50-60%. So now we're looking for continuation or if we need to roll up. UPS, I covered this, I believe, in my last week's video. My analysis on this has not really changed. I am still kind of looking for development further into the gap, or if buyers can show their hand off of this little internal gap to try to trade us higher. We have Qualcomm next, very similar to UPS. I like the swing low to swing high expansion, and now we're kind of trading in this weekly leg here. And when I actually show you the weekly, look at the difference now. Look at what Qualcomm did back in 2024 into early 2025, and now the development in this year. We're actually trying to flip the script off of this really large monthly, weekly supply range. And we're actually trying to get some closes where we had weekly rejections. So all eyes on Qualcomm to see if we can continue to defend above that 168 area. Because if it does, it kind of flips the script, right? You kind of reject, breakdown. Reject, breakdown. So are you going to do the same thing now, or is third time the charm? Next on the list is D, which is Dominion Energy. Really nice broadening low sweep with reclaim. I want to see if pretty much Dominion can show some stability above 58 and eventually continue the broadening expansion back up into that 62, 63. So if you're going about this from your Fibonacci's, you can also do something like this, but it's a little bit arbitrary because there isn't enough evidence that we're actually getting some kind of reversal or retracement to kind of confirm that. So at the current moment, you do have a window here. If it holds 60, some kind of redelivery into that inefficiency that does support buyers to trade it back up at the top of the broadening, or do you go for a deeper extension to kind of identify some liquidity sweeps to then continue higher? But I do like the overall buildup in Dominion Energy. I think it's definitely setting up for higher. That's my overall lean on this. It just comes down to, do you respect this supportive imbalance, or do you go for more of a deeper retracement to kind of identify the higher low off the golden pocket and then get the expansion? But yeah, that's pretty much it. Again, remember, if you liked the pre-market analysis, let me know in the comments, and or if you want me to divide it into two different videos, I can also do 2 different recordings and post both. As always, that concludes my watch list. I do these videos for you guys, hopefully paint a new light in how you could see price action and understand a little bit more about my methodology. All I ask is for your support in subscribing, commenting, liking, share this with your friends and family, share my page if you can. Remember, I'm still trying to get to that 5,000 subscriber mark so I can start posting my overall educational series that I have prepared for you guys. As always, I'll see you next week. Hopefully you guys have a great trading week. Remember, it is Opex. Be safe. A lot of red folder events. And yeah, that's it. See ya.